So are you wondering why I would bother showing you an ugly chart like this Emini Russell Renko chart? A chart where there may not be any Renko-based trade setups that occurred for the entire trading day. Now I would understand if you are wondering this, but then isn't that the point? If you traded the Emini Russell on 12/23, which is the day this chart's from, then this is the chart and the price movement that you had to trade. Your job as a trader is to avoid taking a number of losing trades that aren't base setups. And if that means you didn't get a trade to take for the whole day, then so be it, because you also would have kept from losing any money taking bad trades from impatience. So that is what I want to discuss in this trading video. We'll go through this chart and we'll answer, are there any Renko chart-based trade setups? And could any of the Renko price envelope reverses be traded? So, yeah, this is a problem chart for sure. And no, using a tick chart instead of this Renko chart would not have been easier. Actually, it was more difficult, and you might expect this from a day that the E-mini Russell had a range of only 8.7 points and spent most of the time going sideways and consolidating. And to make matters worse, the two biggest swings were those initial reverses of the price envelopes, and they continued, but there weren't the base Renko trading setups. So again, that led to the two questions I asked. Do you see the Renko chart base setup that I am referring to? There is one. And at this point in our Renko chart trading, it is the price envelope reverse midline reject with MEX flow that we are calling a base setup. And then could we have traded any of the Renko price envelope reversals as a discretionary or mechanical trade, even though they wouldn't have been our Renko-based trade setup? And then if you did this, could you have seen and avoided the trades that would be consolidation trades only? And as we go forward and start talking about taking these initial reversals, because I'm sure you've seen plenty of these Renko charts that reverse and they keep going and give some really, really big trading swings and never have a base setup. Well, if we could take those trades, trading these charts mechanically, that would be great. But again, we can't do it if we're going to end up taking, every reverse and getting whipsawed in consolidation. That's going to accomplish nothing. So you'll keep trading, you'll get chopped up, you'll lose a bunch of money. Why? Because there may be a trade setup that you're going to miss because there isn't a base setup if you don't take all of the trades. I don't want to trade like that, and I'm guessing that you don't either. Before we actually start talking about the chart and possible trades, I want to also show you this chart just to put things in context of what was really going on. So, okay, that yellow square is the open of the day. Then you see these two segments that I have marked, where period 1 is just 78 minutes of consolidation. That range is using the Renko bricks, 1152 to 1149.75, 2.25 points for 78 minutes. Okay, and let's see, when did that start? That started like at 9:12, okay? So look at the swings from the open until 9:12. Up, down, up. Do the initial reverses. You'll be in 3 trades. All profitable. Not a one had a base setup. Then what happens? You got one more reverse that immediately snapped back, right? And then you went into this consolidation. And then there's a breakout. None of the other ones broke out, but now there's a breakout. So you get one more swing, and that swing takes you from 1152 up to 54.25, 2.25 points. Obviously not much in terms of, a nice profitable move, but it's not consolidation. And then what happens? You get this envelope reverse, and again you go no place for like 95 minutes. And the high-low, the right side of this segment is 1151.55. Again, remember we're using Renko bars. If I'm saying prices that can't exist on the Emini Russell future, 1151.55 to 1153.35. So what is that, a 0.80? That segment is 95 minutes. Okay? Again, just a totally pathetic day. For somebody that is trading the E-mini Russell futures only, is not looking at any other, charts or setups that we're talking about all the time. How about your Facebook and your Twitter that we, have been talking about? Boy, look at those charts, and all they did is just, go and go and go. Big moves. But, anyway, it's not the point. I'm digressing. I'm trying to avoid this damn chart. Anyway, let me put that first chart up and we'll take a look again. Okay, so where is the base setup? Well, the components. It has to be a price envelope reverse. After the reverse, we want to retrace to the midline. We want it to reject. The brick pattern that we want into a trade. The base brick pattern, if you will, is green, red, green on a buy, or red, green, red on a sell. And if I didn't mention it, it's with MAX flow on that odd color, brick, the reject brick. So, do you see any of these? And, they're very clear. They're very easy to spot. And again, there's one for the entire day at this yellow dot. Now, I would not take that trade. I understand that it exists, but look at what that trade is all about. It's a consolidation breakout. We said that it had been in place for like 78 minutes, and that doesn't include the 2 bricks before the breakout. Okay? We don't want to trade these horizontal breakouts. There is also a breakout of the high. So I would rather, and if it meant missing the trade, this is a very, very unique situation. Okay, we'll make money tomorrow. We made money yesterday. Let's not, again, take bad trades. So I wouldn't take that trade. I didn't take that trade. You take the trade there. Okay? You get and this happens so often when you get these extreme breakouts, that you get a, retest the breakout area, and then maybe it'll continue again. So you take the trade, and this is our setup. This is the base setup. What I really like about this setup compared to the original setup is look at how you're getting slope on your midline. Compare the purple dots to each other. Okay? So purple dot 1 and purple dot 2, your 2 midline reject bars. See how on purple dot 1 into that breakout, you're essentially, you are rejecting, no doubt about it, but, a horizontal line. And, by the way, also look at your envelope dots. See how horizontal parallel those are to each other? That is an absolute, sign of consolidation. So if you trade purple dot 2, that's really the setup we want. How your dots have turned and started, sloping upward, which is what you want for a buy, as is your midline. Okay? So I'm going to suggest that the yellow dot is the only base setup for this entire day. And you can see after you go to the high and you reverse, do you see another one? Well, you might answer that yes. Okay? And I see exactly what you're talking about. You're going to tell me that this yellow dot here, there's your red, green, red for a sell. The reversal, or the reject bar, then the reversal bar with MEX flow after the envelope, price envelope shift, right? And I'm going to tell you, you can't take that trade setup. Why? How can you take a trade setup and completely ignore price? Look at this blue line. You're going to take that yellow dot right at support? No way. Okay? No way. So yeah, that yellow dot may show your base setup brick pattern, but that's absolutely not the same thing as having a base setup that also has a profit component to it. You don't have a profit component, selling support. Okay? There's no failure of that price. So there's no trade set up there. Okay? Now, what about the initial reverses? Spend a little bit of time, and in many of these videos I bring up about trading the price envelope reverses mechanically. And in this case, I'm talking about these yellow circles. So yellow circle 1, yellow circle 2. Just missed where that belongs, didn't I? Get that on the green dots. There we go. Yellow circle 2 and yellow circle 3. Okay? Just clean price envelope reverse, continuation, no snapback. Not big moves. Although I would have loved to, on this trading day, had those two buys. So, what's your thoughts here? If we're going to trade these reverses mechanically, could we have done any of those trades? And I'll show you what my problems are. I don't like the first one. Yeah, it worked, but I don't think there's good odds of this high into the open breaking out and continuing so easily. Okay? So I don't like that trade. I hate horizontal breakouts. Yellow circle 2. Well, isn't that very, very similar to yellow dot 2, which would now be trading a breakout of support? And if you entered, at the yellow line, my answer to that would be definitely yes, which would make you enter past there and actually go to the yellow dot and trade into the next brick. So on a mechanical basis, I suppose that would be okay. I can't say that I love it. If, just to go back to the first yellow circle too, you can see the bars up at that yellow line, or the bricks. What are there, 4 of them? Let's say you actually had 2 bricks. Let me draw this in a blue line. Let's say what had actually happened was more like this blue line I'm drawing. So you go up, down, up, then you went down. So that when you would have bought yellow circle 1, you would have been buying a triple top breakout price envelope reverse, as opposed to those 4 bricks. Clearly, consolidation breakout. I could do yellow circle 1. And then, do yellow circle 1, you got some profits. I suppose you reverse at the yellow dot. And then you could reverse again at yellow circle 3. And what would you be doing? Well, you would absolutely be trading, initial reverses. And that would be okay. All right? And like I said, we've talked about it before. We're going to keep talking about it. And we're going to have to come up with some guidelines, though. Things similar to what we discussed here for people who want to do this mechanically. We've got what we call two-way price movement. It's when these, charts are able to, reverse, go for a while, reverse again, go for a while, reverse again. Just two-way, moving up and down without going into consolidation, without going sideways. And somehow we've got to get a sense of spotting that versus, consolidation to be able to, consider this. Well, one thing that we know when we start to get that period, that I marked 78 minutes, where you can, pick up the range, the sideways move. Even look at your MEX indicator. Look how that just keeps drifting down. How totally insensitive it is to, the brick movement. And those, red and purple dots. The midline, virtually horizontal. Okay? Consolidation, breakout. We said that was the one base setup. You can't do anything at yellow dot on the blue line. We already discussed that. And then there's nothing else to trade. So again, as I started talking about this chart, if you're not going to trade any of those yellow circles, mention some, filtering ideas. Could have traded the yellow dot and then, the yellow circle's reverse, but not the first yellow circle. That could have been okay. Just once you see or start to see consolidation, stop taking price envelope reverses. Okay? I'm done with this chart. Sick of looking at it and sick of talking about it, but I do have one more chart I want to show you. Okay, on this chart, I bet you can see, a number of trade setups. And they're definitely were. They were relatively, easy trades. One kind of difficult period. Or I'm going to suggest that there were no setups. And what is it that you're looking at? Well, anybody that is familiar with the symbol IWM, you know that you are looking at the Renko chart for the Russell ETF. Okay, this isn't a future. This is the ETF. Same, this is like the cash index for our Russell future. And do you see any of our Renko chart based trade setups? And again, I'm sure that you do. And that's actually what we're going to discuss on our next trading video, so I'm not going to start marking stuff here. The one thing I do want to mark real quickly, though, since it does coincide with the other video, is I told you that there was a, like a difficult period, but then just get price on your chart. This is the same thing like we've discussed previously. If you want to have a, time or tick chart up next to your Renko chart, that's fine. You get good brick formations though that give you that same sense of, some support and resistance area. Just to mark this one, my goodness, how easy of a setup is this for our base setups? Okay, now 2 blue squares. There's your triple break. Go to the 2 blue squares. Retrace. Get your reversal brick after the red reject. It's all with MEX flow. Okay? Buy the triple break. How easy is that, right? Totally base, very clear, very well set up. The difficult period is the moves back to that yellow line. Well, I'm going to suggest that that yellow line is support. Trade's never exited, regardless of the, price envelope reverses. That's right in the support. You can have your partial profit and then keep trailing for support. All right? So you're in that move up by managing the trade for a hold of support. So anyway, we'll go through the whole chart. But what we're going to also be doing is talking about position trading the IWM. The Russell, the Emini Russell future, we look at as day trading. This IWM we look at as position trading. And this is actually a chart that goes from 12.4 to 12.24. So you're talking about, it's all the bricks you got using 0.3 bricks in 20 days. Now I realize some of those are weekend days, but anyway, that's the kind of stuff we want for position trading. So we're going to talk about position trading the IWM using our trading method strategies for, stocks and options, as combination trades. We'll want to look at that. And we're going to be talking about doing this with a portfolio approach. Okay? Meaning trading a group of ETFs. And this is one of the new trading strategies. I mentioned a few times, but we'll definitely be talking about for the new year. So there's your E-mini. What if we had a Renko? Well, it doesn't have to be Renko, or just an ETF portfolio. Let's use the E-mini. Let's maybe use the SPY, the Spider, or go even to the diamonds. And we could throw in a currency, and we could throw in oil. We could get 4 or 5 of these, 6 of these. Ideally, not very well correlated. Trade them as a portfolio. So, anyway, there you go. I'm done with this video. I wanted to go through that ugly chart again, and really point out some things that I think are very, very critical for traders. And when you've got your base setups, or you got price continuation, trade. Okay, take them all. But when you don't have that, then start avoiding trades. Okay? And then I wanted to talk about this chart. Just give an overview. Okay? Some things I want to do. Also be able to look at a prettier chart. So, anyway, I'm done. Have a good one. I'll talk to you later.